Once again, good evening, everyone. Hope you guys had a wonderful day. Please make sure that your student numbers are captured into the chat section. Also, please take note of the WhatsApp group. Quite a number of students have already joined. I think it's in excess of almost 100 and something students that's part of that WhatsApp group. If you want to be part of it, please send me your module code and your name to that number, and I'll send you an invite to the group. The group is basically there for me to share the questions that we will be doing each evening and to communicate whether there will be class or not. So for instance, tomorrow evening, we have not scheduled a class. However, should it work out that I am able to present a class, that will be the medium that I will use to communicate it over. So please make sure that if you want to get such notifications, the solutions and other questions that we will be doing, you are welcome to join that group. I've also last night shared the notes which is basically study notes on each of the chapters or some of the chapters. Specifically, let me just go back to it. It related to partnerships, financial statements, closed corporations, and also the introduction to companies. That's the question that we will be doing tonight. First up is a company's question which relates to shares. I'm just quickly going to open the question on my side. In the meantime, please make sure that your student number is captured in the chat section. You guys can open the first company question that I emailed or that I sent over the WhatsApp group. I hope you guys can all see the screen. Guys, the question that we will be focusing on tonight is a share question where we have an underwriter involved. So what is the purpose of an underwriter? If you think about it, why does a company issue shares? What is the reason for a company issuing shares?
To gain profit.
I wouldn't say profit necessarily.
I think it's generally more about capital.
Yep. Sorry, guys, can you just repeat that last part? You cut out a bit.
I said it's more about capital.
Yes.
To increase their capital.
Okay, so the purpose is?
To raise capital or investment.
Raise capital. What does a company do with capital?
Acquire assets, reinvest in business.
Yes, all those fund projects. Acquire assets for production. Any other operational needs, because remember that is what makes a company different than a closed corporation, a partnership and a sole proprietorship, is that it is a legal entity. Well, together with a closed corporation and a company, they are legal entities. So they exist as almost is in the same way as a natural person. In fact, one court case said once that a company and a closed corporation, in other words, a legal entity, has got all the same attributes as a natural person except for that it can't adopt children and it can't get married. So that entity is an entity on its own. So obviously it needs money to drive the business. So in a partnership, the partners will contribute, or they will add to the partnership either skills or expertise or money. A closed corporation, the same kind of thing. They will add a contribution, expertise, things like that to drive the business. But a company is a bit different. It needs funds from the outside, and there's two ways they can get that. The one way is by issuing share capital, by selling shares. So someone will purchase a part of the business or invest in the business rather, and they will obtain shares in exchange for money or whatever purposes they might be, or whatever the reason might be that the company might need that person. It might need that person's capital, for instance, it's that person's money, or it might need that person's expertise. The company might not have the necessary funds to pay for a chartered accountant or a bookkeeper or any other internal business specialist. So they will say, you know what, we will give you this amount of money, and in exchange for the part that we are paying you less than the market, we will give you shares in the company. So you will become a part owner in the company. But something that is one of the main differences between a company and a closed corporation is that in a closed corporation, the members are actively involved in making the profit. They have the say in the business. Whereas with a company, the shareholders are completely separate from the business. They only own shares in the company. The company is managed and run by the directors. So the directors are the decision makers within the company, and they need to obviously do the business in the best interest of the shareholders. Okay, so let's get back to what we started with. Why does a company issue shares? To raise capital. That capital will be used to fund projects, acquire assets for production, etc. There's lots of ways. So what is the fear when they advertise shares to the public? What is the fear, or what is the risk? Let's rather use the correct term. What is the risk?
The risk is for the share under subscription of shares, not to gain enough capital.
So we're not gaining enough capital. In other words, we issued, for instance, 20,000 shares, only 15 got taken up by the public. So we need to mitigate that risk. Risk can be mitigated.
Right now, and I'm coming past you to drop off the SIM card.
Just make sure that your mics are muted.
I'll give you a shout. Thanks.
Just a friendly reminder, please make sure your mics are muted, otherwise we can hear your personal conversations. Okay, so the risk can be mitigated by appointing an underwriter. What does an underwriter do? So basically, we pay an underwriter a commission in exchange for this payment. The underwriter sort of guarantees that all shares will be taken up. How does he do that? The underwriter will take up any shortfall, any shares not taken up by the public. You guys must excuse me, there's spelling mistakes. I'm doing this as we speak. Okay, so why does a company issue shares? Raise capital to fund projects, acquire assets. So obviously the risk will be under subscription, not gaining enough capital, and the risk can be mitigated by appointing an underwriter. What does an underwriter do? We pay an underwriter a commission. In exchange for this payment, the underwriter guarantees that all shares will be taken up. How does he do that? The undertaker says he will take the risk and he will take up any shortfall, any shares not taken up by the public. There our risk is mitigated. So the only thing that you need to know here is that where an underwriter is involved, if the underwriter has to take up that commission, or the underwriter needs to take up shares, he will take it up at the same value as any other shareholder, and we will pay that underwriter a commission. The commission that we pay that underwriter will be a normal expense. Everybody happy with that? So let's quickly look at question 4. So it says here, Leasewell Limited was incorporated on 20 June 2005 with an authorized share capital consisting of the following: 400,000 ordinary shares and 150,000 8% preference shares. So that is just the number of shares that that company is supposed to take up, or that company can issue. That's the number of shares that it's authorized by the registrar of companies that it can issue. It can't issue more than that. And then it says issued share capital: 250,000 ordinary shares and 80,000 8% preference shares. On the 31st of July 2012, only 200,000 ordinary shares were on issue, while remaining shares were issued on the 2nd of January 2013 at a fair consideration of 100,000. These shares were underwritten by Monique Financial Services at 1.5% commission. All shares were allotted to the public and commission paid to the underwriter. Okay. At incorporation, Leasewell Limited issued 40,000 8% preference shares at fair consideration of 40,000 Rand. The remainder of the preference shares were issued and allotted to the public on the 1st of February 2013 for 120,000 Rand, considered to be fair consideration on that date. On the 31st of July 2013, the board of Leasewell Limited decided to issue capitalization shares to ordinary shareholders in the ratio of 1 share for every 4 ordinary shares held at a fair value consideration of 156,250. On this date, Leasewell Limited had a credit balance of 350,000 in the retained earnings account. Preference shareholders will be paid dividends in cash. Okay. What I first want to do is I want to go back to a question that we did last night. Remember, when we have a rights issue or a capitalization issue, it's almost like a bonus issue. And whenever we do a bonus issue, it means we are giving our shareholders shares, but if we give them shares, then our share capital increase as well. Because if we are just dishing out shares, we are actually diluting the share value. In other words, we are diluting the value of other shareholders' interest in the company. Everybody happy? That makes sense. If I have 100 Rand worth of share capital, and that is made up out of 100 shares of 1 Rand each. So the value is 1 Rand each. For 100 shares, It's 100 Rand share capital. So if I suddenly say 100 shares equals 100 Rand, okay? And now all of a sudden I say I now have 120 shares, but no transfer happened to the value and the value is still the same. That will equal per share. And if I don't do that, you guys see what's happening to each share. I'm losing value. So obviously, if I do a capitalization issue, this movement needs to happen. I, the company, will transfer distributable reserves to the share capital account. So I will debit my retained earnings and I will credit my share capital, because both are equity, and equity increases on the credit side and decreases on the debit side. So I will transfer retained earnings to the share capital account, and this scenario won't happen then. The dilution of share capital, that won't happen. Because what I actually did, I also transferred 20 Rand from retained earnings. So the value stays the same. If you guys have got any questions, you can let me know. Okay, let's look at the required part. Record in the general journal. So before I read that, what's important about the required part in the exam? You need to know what they want, for when they want it, and how they want it. So what, when, how. Record in the general journal of Elizwa Limited the issue and underwriting of the ordinary shares. What do they want? The issue and underwriting of ordinary shares on 2 January 2013. Nothing else, nothing more, nothing less. Then 6.3.2 says record in the general journal all transactions pertaining to the capitalization issue of ordinary shares and dividends paid to preference shareholders. Okay. So let's quickly have a look at that. So the general journal. This is part 1 of the question. Okay. Let's go back to the question. So they say here, on the 2nd of January, we issued the remaining shares. How many shares are there? So we already issued 200,000. So 300,000 shares at a value of 100,000. And we also got in the services of Monique Financial Services at 1.5% commission. Okay. Let's do that. So first, when you issue shares, you get the application. So you will say, I received in bank a specific value of money, the 100,000 in this case. But we don't take that to the share capital account immediately, because we first want to see how many shares were applied for. So we will say application and allotment account. Ordinary shares, 100,000. Everybody happy? So this is the receipt of application money from the public. Because they said here all shares were allotted to the public and the commission paid to the underwriter. So although we paid the underwriter the commission, he didn't take up any shares. So that's a very important point that you must remember. Even though he didn't take up anything, the fact that he carried the risk means that he rendered a service. He protected us. So we had to pay for that, that service. So that's the first journal. The second journal is now the application. So they say all were taken up by the public. We didn't receive more or less, so we can allot the entire 50,000 ordinary shares that we issued. So now we will take that account and we will credit that account. And now we will transfer it to the share capital account. Ordinary shares. And the reason that we, or the narration that we will use here will be the, you can say, the allotment of 50,000 ordinary shares. Okay. And then, as I said, even though the underwriter didn't take up any of the shares, he still carried the risk, and we need to pay him his commission. What is that underwriter commission? What would the value be?
$1.5.
100%, because we want to raise 100,000 rand. So that's the full risk. If none of the public members of the public take up shares, that's the full value that the underwriter will have to take up. So we must apply the commission on that value. So times the percentage, that was 1.5% commission. That will equal 1,500 rand. And the reason can just be payment of the underwriter commission. Everybody happy? The second part of the required says record in the general journal all transactions pertaining to capitalization issue of ordinary shares and dividends paid to preference shareholders. So three things here. They want you to journalize the capitalization issue and the payment of what? The preference dividend. The three things that you need to pay attention there to is those. It's three requirements. It's the capitalization issue, the dividend, and the preference shareholder. So one, let's two. Guys, as I always say, this is a participatory class. I'm going to minimize the screen a little bit so that you guys can see all the information. I'm going to mute on my side, and I would like you guys to do the journal entries for 6.3.2. I'm going to give you about 4 minutes. If you are done, please use the hand function, or you can comment in the chat section that you are done. Before you start, please make sure that everyone that's in the meeting, please make sure that you have copied your student number into the chat section. It is extremely important that you do that. So say 4 minutes for 6.3.2. Guys, please remember to use the hand function if you are done, or you can comment done in the chat section, just as an indication for me who are still busy. I'm going to give another 2 minutes. Guys, does anyone need a few more minutes, or can I continue? Okay, guys, just a reminder, please make sure that your student number is copied into the chat section. Okay, let's continue. If anyone needs more time, you guys can just unmute and say so. Okay, so let's read that sentence again. It says on the 31st of July 2013, the board of Alizwa Limited decided to issue a capitalization share issue to the ordinary shareholders in the ratio of 1 share for every 4 ordinary shares held at fair consideration of 156,250. On this date, Alizwa Limited had a credit balance of 350,000 in the retained earnings account, and the preference shareholders will be paid dividends in cash. Okay, let's go to the calculation. Okay, so how many shares are in issue on the date of the capitalization issue?
I got 50,000 shares.
So they say 400,000 ordinary shares is the authorized share capital. 250,000 ordinary shares are currently in issue. And then they say issued share capital. So this is issued share capital 31 July 2013. Important to look at the date there. Then they say on 31 July 2012, only 200,000 shares were in issue. So another 50 were issued. So we know when that 50 happened. But here they say, let's just read those dates carefully. On the 31st of July 2013, the board decided to do an issue, capitalization issue. I don't give a specific date, so that means 250,000 shares will be subjected to the capitalization share. So 250,000 are currently in issue. One share. Shareholders will receive one share for every 4 held. So that means the 250,000 shares divided by 4. Okay. Everybody happy? So the 62,500 is there? Is the shareholders, is the capitalization issue. Everybody happy with that? So now we say, okay, let's do the journals there. They say we will use, or the fair value of this issue is 156,250. And there is enough money in the retained earnings account, because they say the retained earnings is 350,000. So the journal should be transfer from retained earnings to the share capital account Okay, so we are transferring from the retained earnings account to the share capital account the fair value. Everybody happy with that? Capitalization of ordinary shares. Now the preference dividend. What is the value of the preference dividend? Can anyone tell me the value of the preference dividend? What is the value of the preference share capital? Did we do another issue? Yes, we did. They say here at 31 July 2013, 80,000 ordinary preference shares were in issue. And they tell us that 40,000 were issued on the 1st of Feb 2013. Okay? So a total of 200,000 is an issue. So 200,000. What is the preference share percentage? 8%. Therefore, the value of the dividend will be 200 times 8%. Is that correct?
Yes.
Let's have another look. Guys, you guys are very quiet. It makes me wonder if you guys are struggling, or are you tired, or don't you understand? So I need to know.
Hi, sir.
Yes.
The first issue of preference shares, did they receive 40,000? 40,000 rand. Oh,
The first
what did
issue.
say? The first,
The very,
yes,
yeah,
yes,
the very
that one.
first, yeah.
And they say the remainder is 120. So isn't it 160?
What do you guys think?
Oh,
I think because we're given a balance at the end, so
Yes.
we're going to use that balance. That's why we're using that balance.
They give us a balance here right at the end.
oh, so you use the balance at the end. Okay.
Yes. So that balance right at the end is the value that we have to use.
Okay. All right. Thanks.
Everybody happy? We must just make sure that we read everything very carefully. And they say here at incorporation, they issued 40,000 shares at a fair consideration of 140,000. And then the remainder of the preference shares were issued and allotted to the public on the 1st of February 2013. But then they give us the fair value there. So this doesn't seem, I'm going to be honest with you, if I look at the question, so it seems like there might be a little bit of a discrepancy here, because they clearly state that that is the date and that's the value. So in the question, I would have worked with that value straight. Any questions? So it's the preference dividends. And we pay that, they said cash, so bank. $16,000. And then if you have to do the journal narration, dividends declared. Any questions? Okay, guys, then we can open the question paper. Just by show of hands, are there anyone in this meeting that do not have the question paper that I've sent over WhatsApp? If not, please make sure that you take down the WhatsApp number, send me a request, and I will quickly add you to the WhatsApp group. So I'm just going to mute for 1 minute, and then I'm going to open the exam that we're going to be doing, and we're going to be doing question 5 first. Let me rather correct that. We're going to be doing question 4 first. Okay, I haven't received any requests, so we can. I think you guys do have an idea what work I'm going to be working on, what question I'm going to be doing. Open it. So it's FAC1601's question paper for October, November 2015. Let's please go down to question number 5, which is companies and share transaction. Guys, I'm going to be honest with you, this is a very important question. I did not see it once. I saw a similar question again. So this is a very nice way of asking it, and it's a very good question to ask multiple question style. Because you can do your calculations, there's not a lot of disclosure required. They can give journals in multiple choice format. They can ask calculations in multiple choice format. So this is a very good question to ask in a situation where a multiple choice will be the format of the exam. So what I'm going to do is we're going to be doing a lot of working together now. So I need you guys to please work together so that we can do this question as if it was the exam. I'm going to read through the required part first. The part that I'm going to ask you to do is part A, is to calculate the number of shares that were subscribed for by the general public before the capitalization issue. They tell you what they want, when they want it. Calculate the number of shares that were subscribed for by who? The general public before the capitalization issue. So let's read the question. So BOMA Limited was registered on the 1st of January 2015 with an authorized share capital consisting of 200,000 ordinary shares. The company offered 10,000 ordinary shares to the incorporators of the company at a value of 20,000, all of which were taken up and paid for on 28 February 2015. On the 1st of February 2015, BOMA Limited shares traded at 20% more than the previously recorded price, and the company decided to offer ordinary shares to the general public. This public offering was underwritten by Doomsday Bank at a commission of 4%, which had to be settled by the 31st of May 2015. The company's accounting records indicate an expense amounting to 6,000 as underwriter's commission. The shares to the public were issued and allotted on 28 May 2015. On the 1st of June 2015, BOMA Limited received a check amounting to 36,000 from Doomsday Bank as a final settlement. On the 28th of June 2015, the board of BOMA Limited decided to issue capitalization shares to ordinary shareholders in the ratio of 3 ordinary shares for every 5 ordinary shares held, at a fair consideration of 136,800. On this date, BOMA Limited had a credit balance of 500,000 in the retained earnings account. Guys, what I'm going to do is I'm going to simulate this in terms so that it looks like the exam. While you are busy doing this, I'm going to share a multiple choice question on the WhatsApp group within the next 2 minutes. And I would like you guys to participate and give the answer that you get. Can I get a show of hands if everybody is willing to go that route? Just to get an indication if you guys would be up for that. Okay, the majority has already spoken. Guys, okay, so cool. You guys can just lower your hands and then do the first part of the question. I'm going to share questions on the WhatsApp group within the next 2 to 3 minutes. So prepare part A for me first. Guys, I've shared a multiple choice question on the group. You can participate by just clicking on that link that I've shared and just following the screen below. If anyone is struggling to answer, please just let me know. I'm going to give you another 5 minutes. Guys, I can see 3 people has already answered the question. I'm going to give another 2 minutes, so please do log your attempt.
So do we answer in the chat or on the WhatsApp?
On the WhatsApp, you will find a link. So you choose the answer that you want and you click on that link and just follow the instructions below this at the bottom of the screen.
Okay, okay.
Okay, 9 people has answered. Does anyone else want another opportunity before I continue? So I can take that as a confirmation that I can continue. 100%. Start on a new slide. Okay. Let's first look at let's start at a point. Just want to, what is the current share price? Or what is the current share price?
It's 2 rand per share.
Yeah.
£2. Then they say on the 1st of February 2015, Boma Limited shares traded at 20% more than the previously recorded price. What is the new share price?
Should be
2.40.
2.40 cents.
100%. Okay, so let's leave that there. What is the commission percentage?
4%.
Okay. What is the value of the commission?
6,000.
6,000. So if that was the commission, what is the value of the shares issued? For
100.
which the underwriter was responsible. So you'll take the 6,000 and you'll divide it by 0.04. So 150,000. Does that make sense what I've just done there?
Yes,
Yes.
I got the same. Yes.
Okay,
Yes.
brilliant. So that is what was the general issue. But what did the question ask? What is the number of shares that were subscribed for by the general public? So how many shares did the underwriter take up? Final payment received from the underwriter. $36,000. Correct?
Yes.
So that means that is what they paid for whatever they took up. So it means there was a short issue. Everybody happy with that?
Yes.
So 36 divided by the new share price. It's 15,000 shares. What was issued, or what was taken up by the general public? So it will be the 62,500 less the 15,000 taken up by the underwriter. That will be the answer. Okay. So 40% of the participants got that right, which is 4 out of 10. Is there anyone that wants to ask a question on this? No question. Okay. Everybody happy? Can I continue?
Yes,
Let's
please.
continue.
Yes, you
Yes.
can.
Let's go to so this is the first part of the question. Part 1. Go to part 2 of the question. Now they ask, record the journal entries in the General Journal of BOMO Limited for the period ended 1 February 2015 to 30 June 2015. They tell you what they want for when they want it. So don't do additional stuff. They just want for that period. So they basically want this part. Okay? Not that part. Just this part. Let's do that. I'm going to go a bit quicker now. So on the 1st of February, we did the whole issue to the public, and we also got in an underwriter. So let's start with that. Everybody happy? You guys are eerily quiet tonight. Let's look at 1st of Feb. Okay, nothing really happened there. We just issued it. And the public offering was underwritten by Doomsday Bank at a commission of 4%, which had to be settled by the 31st of May. Indicated an expense amounting to 6,000 as underwriter's commission. The shares of the public were issued and allotted on the 28th of May, 2015. So that is where our journal will start. Everybody happy with that? What's our first journal?
Underwriting commission. We debited.
Guys, just give me a moment. Apparently I didn't plug in my laptop and I'm getting a low battery signal. There we go. Okay, so we start on the 28th of May. Everybody happy with that date?
Yes.
Bank, application and allotment, ordinary shares. What is the value?
The value was 6,000.
36. Oh,
How much was received in total?
36,000.
Remember, this is not just the underwriter, eh?
114,000.
Correct.
Is it 140? Which
Correct.
one?
114,000. Because we have a total share issue of 62,500 at what value? So that is what came into the bank. Is the 62,500 times the new R2.40. Everybody happy with that? Because I'm not. How do we get the 114?
It's 47,500 shares times R2.40.
Here we go. It is what was issued to the general public times the new share value. Okay. I'm not going to do the journal narrations now. Then the second journal will be where we take what we've got and we allocate it to the ordinary share capital. Everybody happy with that? Okay. So we will say
Yes.
it is the application and now comes a very important part. We will say share capital, ordinary shares. What is the par value of these shares? That is the par value. Means the original share price. So 47,000 times the original share price will be what's going to the share capital account. The rest is going to the share premium account. Everybody happy with that? The share premium is the part that is more than the par value. the portion of the share price that exceeds the par value or initial share issue value. Okay. Then we had another issue. Because we did issue an entire 62,500, but a portion was taken up by the underwriter.
By the
Correct. Yes. So the same scenario will now happen. But this time it will be only the 15,000 times £2.40. Because this is what was taken up by the underwriter. This will be the 15,000 times the par value. So 6,000 will be the share premium account. And then we also paid that commission. So we will have share issue expense. Everybody happy with that?
Yes.
And then we had the rights issue, the capitalization issue. So let's do the calculation for the capitalization issue first. Capitalization issue. What is the total issued shares? So there were 10,000 ordinary shares to the incorporators of the company. And then we issued a further...
Charles?
Yes.
I can't see a screen, or is it my PC?
I think you must just usually when that happens, just leave the meeting and join again.
Oh, okay, thank you.
It might solve the problem. Okay, guys, let's continue. So what is the value of the shares, or what is the number of shares that will be subjected to the capitalization issue?
72,500.
It will be the 10,000 plus the 62,500, 100%. So it's the total shares will be the 10,000 plus the 62,500. 72,500. And the issue, the capitalization shares is 3 shares for every 5 held. So that divided by 5 times 3. Everybody happy with that value? The journal will therefore be the same as what we practiced earlier. Retained earnings and ordinary share capital. And we will transfer that fair value that they speak of in the question, the 136,800. Everybody happy? Okay. Guys, I'm going to save the questions. That is all that we will be doing for tonight. We will start with question 1 tomorrow, or maybe tomorrow evening. Please take note of the WhatsApp group. We will note all the questions all the time, the other sessions on that WhatsApp group. But I will speak to Adele, but we will schedule more sessions next week from Monday, Tuesday, and Wednesday. Before you leave, please make sure that you've copied your student number into the chat section. That's a final reminder. Are there any other questions?
Yes, Charles.
Yes.
Last night you mentioned something about you were going to put up on a chat group about the poll. Then we need to indicate on the poll which lessons or lessons that we want, that we are struggling with. Say, for instance, the cash flow statement or whatever the case. But you've never put that poll up for us that we can indicate on there.
100%. I'll do that tonight for you guys.
Thank you.
Hi, Charles.
Yes.
The branch chapter, how much do we have to do?
Same as the other chapters, you must understand it well. I'll make sure that I get some questions on that for you as well, maybe during next week.
All right. Okay. Thank you.
Any other questions? Guys, if there's no other questions, then you guys must have a wonderful evening. And please look out on the WhatsApp group for any other sessions that we might have tomorrow. It's not scheduled. So please just have a look out for that. Other than that, I'll see you guys next week if we don't have a class tomorrow evening.
Thank you so much.
Thank you.
Thanks, guys. Enjoy the evening.
Okay, good evening.
Thank you. Bye-bye.
Thank you.
Thanks.